YouTube, what's up, guys? What's up? What's up? Hope you guys are doing well today. Man, I gotta lose some weight, man. My chubby cheeks are coming back, bro. I've kind of been not locked in when it comes to my diet, so I gotta start eating healthier. And honestly, man, it's the pizza, man. I love pizza so much, and I love ice cream too. I was so locked in, like back in August, back in like the summer era of last year. Man, I was like sub like 12% body fat and everything, abs. Now I'm like, I lost my abs and I'm getting chubby cheeks again. But that's totally aside. That's totally besides the point. Also, I got the beanie on today. It's super cold outside and it's raining, and I'm just looking forward to the summer, man. It's starting to heat up soon. But in this video, I want to talk about something that's very important, something that I really want to discuss with you guys. And I'm getting a lot of questions about investing in particular. I'm getting a lot of questions about how to start investing, what to invest in, where to invest, just a bombardment. And in this video, I kind of want to just do like a full breakdown, like basically a 101 guide on how to start investing, whether like regardless if you're in the military or not. Like, this is a video purely on how to start investing as a young adult, whether you're 18, 19, or in your early 20s. This video is perfect for you. I will be explaining more from a military context, obviously, because this channel is more military finance oriented. Clearly see I'm in the service, so I kind of like to explain my point of views and perspectives from a military context. So just a disclaimer before I start, I do want to say that I am just a 19-year-old private dummy in the Army. I'm not a financial expert. I'm not a certified advisor or anything like that, right? I'm going purely based on my 2 years, shy of 2 years worth of experience when it comes to investing in money. And my portfolio currently sits at about like 65K right now. The market's been a little shaky right now just because, all the stuff happening in the world and just all the events going on, especially here in the United States. And it's a little shaky, but again, man, just a little bit of temporary noise is not enough to scare me, right? It's all just distractions. It's all just a bit of noise. We're all here to invest for the long term, to invest for ourselves, for years to come, for decades to wait, right? If you came to this channel kind of expecting like a guide on how to day trade or swing trade or whatever like terms they throw out there, this is not the right channel for you, because I'm very focused on index funds and long-term investing, so kind of like the Warren Buffett philosophy and way of thinking. So if you're into that kind of investing, then welcome to the channel, welcome to the video. This video is going to be perfect just for you because I'm going to be breaking it all down. But yeah, without further ado, let's stop yapping and let's jump right into it. All right, so to start off, what is investing? I want to answer this question real quick before we just jump blindly into how to invest and all this stuff, right? Because I see a lot of young people like myself just begin investing and putting money into the market without even understanding what they're doing with their money. So in simple terms, investing is just buying assets that grow over time. So instead of working for money like we do when it comes to our jobs or whatever, instead of working for money forever for the rest of our lives, you let your money begin working for you. What I mean by having our money work for us is we're going to be putting that money into investing in high quality stocks in index funds. When you invest into shares of an index fund or a stock of a company, you're basically buying into partial ownership of whatever stock or index fund you chose. When you have partial ownership of a company, let's say Apple, let's say you have a share of Apple, which I don't even know what the price is of a share of Apple right now is, but if you buy a share of Apple, you have one share of ownership in that company. If the company does really well, it's going to grow in value, obviously, over time, because the company is working for you as a partial owner, so the value of it will increase. There's going to be higher demand for purchasing into shares of that company. There's a whole bunch of other factors that play into it, right? There's like factors like inflation. Inflation is like kind of like the primary cause for why stocks and index funds rise up in value so much. But you get the point. Basically, instead of working for your money forever through a job, through a 9 to 5, you'll be working, but also putting that money that you make through work into stocks and index funds that will work for you. You get what I mean? Like, it grows for you. Another thing I want to say is when you work for money, I see a lot of people make the mistake of just saving it. Like, they put it into a savings account or a checking account and just let it sit there, which is the biggest mistake you can make with your money, because you're just storing your money basically away. When you store your money away like that in just like a bank account, right? Inflation is slowly killing the value of that money, meaning the money is going to be worth less over time. While you may not feel it immediately, right? You may not feel the effects immediately. You see the money in your account and it's still there. Like, it's the same value and everything. You'll feel it 5-10 years from now when inflation grows like exponentially, or just not exponentially, but like incrementally is what I mean. Let's say pack of of eggs might cost like, I think it was like let's say a pack of eggs is worth like, it costs like $3 today. In 5 years, 10 years from now, it could probably double. We don't know. Like sometimes inflation increases by 6% on average. Sometimes it's 8-10%. We don't know. If you invest your money, if you put it into reliable, safe index funds or stocks, that money is going to be growing over time. If you invested, compound interest will do its thing and let your money grow because you have ownership in assets, in stocks and companies that have cash flow. Like, it generates actual cash flow, meaning it will increase in value versus just keeping your money sitting there in a checking account losing value. You're actually putting that money to work by investing it into companies you could reliably trust and know that they will grow over time. A lot of people make the mistake of what to invest in. A lot of people invest in like speculative stocks, right? Or they just invest in individual stocks in general, which it's not a bad idea inherently to invest in like single companies, right? But it carries a lot more risk versus just investing into an index fund, which is basically a basket of stocks. A index fund, so let's take like the S&P 500 index fund, or like any S&P 500 index fund is what I'm trying to say, like VOO or IVV or something like that, or FXAIX. Those ticker symbols are ticker symbols for specific index, for specific S&P 500 index funds, and they track the S&P 500, meaning it tracks the largest 500, the top 5 largest companies. I hope that makes sense, right? If you invest into an S&P 500 index fund, is what I'm trying to say, you'll be safer off than investing into an individual company on that list of the top 500 companies. Because let's say you invest into Amazon one day and Amazon crashes, then you're at a loss, bro. Like, Amazon is down 10%, man, you're at a loss right now. Versus if you invested into VOO, for example, which is Vanguard's S&P 500 index fund, Amazon might be down. However, every other company, Nvidia, Apple, whatever, Microsoft, could be up, meaning that slight loss you get through Amazon might not make a huge difference because everything else is up right now. So that's why I preach so much about index funds, because index funds are probably just a foolproof way of building wealth, because they grow on average. Like, the stock market will grow on average about 12 to 15% annually. Usually it's more than that. Like, if you look at the historical chart of like the last 10 years, it's been like crazy, like numbers like 20 to 25%. If you were investing like 10 years ago in the S&P, like, wow, bro, you'd be crazy wealthy right now. If I was investing what I'm investing right now in back in 2015 and waited 10 years from now, bro, I would have been a millionaire. And it's that easy, bro. And I know that even right now, if I'm investing right now and I wait 10 years, I'll be a millionaire. It's all about patience. That's what it's all about. You just got to be patient and not be emotional about your investments, bro. That's all it's about. You just can't be emotional about it. All right, so before you even begin investing, I know I was just explaining what investing is, but I need to get this also out of the way. I need to tell you guys what you need to do before you even start and consider investing. And the one thing you need to start doing is build a foundation to your financial wealth. 3 steps that I want you guys to do before you even invest a single dollar into the stock market. And that is, step 1, you need to make an emergency savings account. Yes, I did say that keeping cash on you is a bad idea because it's losing value due to inflation. However, you were to run into an emergency one day, parent is sick, you need to fly home, or your car breaks down, or like something like that, right? Something crazy happens, or there's that crazy concert you need to see, right? Immediately. You don't want to take money out of your investments. You don't want to A, go use a credit card because you don't have enough money to cover the expense, or B, take money out of your investments to cover the expense, because those two are the worst options you can do. What you need to do before you even start investing is you need to build a good funded emergency savings account. I would say at least 3 to 6 months worth of expenses. In my case, I would say like $5,000, right? Just keep $5,000 in preferably a high yield savings account. If you don't know what that is, a high yield savings account is a savings account that allows you to earn money on that money that you keep in the account. So if you have like a high yield savings account that has like 5% in it, like a 5% interest rate on it, then you'll be earning 5% on that $5,000 you have in that account every single year. So you're earning like a little bit of money on top of what you have in there, just so it barely beats out inflation. You know what I mean? Versus like a regular savings account usually has like 0.01%, which is like once you have that foundation down, once you have a funded savings account and you know that you're covered for any surprise expenses you may have, then you should be ready to move on to step 2, which is you need to eliminate debts. Any kind of debt you have, especially credit card debt. If you have high interest debt, if you carry a balance on your credit cards, you need to erase it right away. I'm talking like if you have credit cards at like 25 to 30% APR, bro, oh my God, like erase it immediately. Fund that savings account and then start dealing with that debt right away, because you cannot start investing if you have debt. Because like I said earlier, the stock market will give you an annual return on average of like 12 to even 20%, right? Versus high interest credit cards, they usually have an APR TLDR of like 30%, 30 to 36%, which is outrageous. It's almost double of what the market yields every year. There's no point of investing in the stock market if you're earning interest on your credit cards. In step 3, you need to have stable income. You need to have a job that consistently pays you like almost the same amount or more every single month. If you have a occupation or like a job or something that pays very inconsistently, it's going to be difficult to invest, because like I said, if you're making like $2,000 one month and then the next month, the following month, you get like 500, now like you're stressing because you might have expenses you need to cover, and you're now going to start pulling out of your emergency savings account too often. You're going to start selling off your investments. You're going to start using credit cards. Like, it's all a snowball effect of just disaster. In my case, in the military, like, I can reliably say that I earn 2 paychecks every single month without problem, and it pays me the same amount. So my expenses always remain the same and my pay always remains the same, unless I get promoted, of course, and get more time in service. Then I get paid even more, which when I get paid even more, I just start investing more. It's that simple, right? So remember, the 3 main foundations before you start investing is to have an emergency fund, have no interest high debt, and have a stable income job. All right, so let's talk about the best investing accounts you need to open to start investing. Now, number 1 is you need to have a 401k or TSP, in my case, if you're military. If you don't know what a 401k or TSP is, they're basically it's an employer matched retirement account. So it's similar to a Roth IRA, which I'll talk about later. It's a tax advantaged account that allows you to contribute a specific percentage out of your paycheck every month into that retirement account, and it grows over time. In my case, for the TSP, right, I have it set at 5%. So they take 5% out of my paycheck every single month, and they contribute that 5% into my TSP. And on top of the 5% I put into the TSP, they'll match an additional 5%, because that's what the government offers. In the military, they offer a 5% match. So as long as you're putting at least 5% into your TSP, they will match an additional 5%. So that's the most important thing about a 401k and the TSP. That's why I think it's the best investing account, just period. A Roth IRA in a taxable brokerage account won't do those things. I have never seen a Roth IRA offer a match, except for like Robinhood, right? If you do not invest into your 401k or your TSP that offers a match, then bro, you're just leaving free money on the table. The employer is literally offering you free money to contribute into that 401k or TSP. So I would say just invest enough money to get that full match, which in my case, again, it's going to be 5%. I put 5% into my TSP every month, and then therefore I get an additional 5% free money into my TSP. All right, so the second best investing account is opening a Roth IRA. So like I said, a 401k and a TSP is similar to a Roth IRA, but here's the difference. A Roth IRA is a tax-advantaged account that lets your contributions grow tax-free, just like a 401k and a TSP would do. Only difference is that they won't match you, but it's still great regardless, because you can contribute like I think $7,000 of your own money every single year into a Roth IRA, and it'll just grow tax-free over time. Once you reach retirement, bro, you can take out whatever earnings out of that Roth IRA completely tax-free. So let's say if you were to invest into a regular brokerage account instead versus a Roth IRA, if you take out the earnings out of that regular brokerage account later on in life, retirement age, you're gonna have to pay taxes on all the earnings on that brokerage account. Versus a Roth IRA, all those earnings are completely tax-free, and you don't have to report that to the IRS, which is absolutely amazing. It's very effective when you invest in a Roth IRA early on when you're young, because you're going to be in the lower tax bracket. So invest while you're young into a Roth IRA, and then take out the earnings out of that Roth IRA once you're older, so that you don't have to pay all those taxes versus how you would in a regular brokerage account. All right, so the third best investing account you can create, aside from a 401k or TSP or a Roth IRA, is a regular brokerage account. So like I said, a brokerage account is a taxable account, meaning there's no retirement benefits linked to it, but that doesn't make it bad inherently. A brokerage account can be very flexible. I like investing in a regular brokerage account and a regular taxable brokerage account because I can be flexible with my money. I can move it around however I like and build wealth outside of retirement. I don't want to have retirement wealth. Like, I don't want to be a millionaire at 60 years old, bro. I want to be a millionaire like as soon as possible, like at age of 30, right? So that's why I like putting so much money into a regular taxable brokerage account. Again, bro, like I want to enjoy my money now, not when I'm like super old, right? But again, that doesn't make a Roth IRA or a employer matched retirement account bad inherently, because they have a lot of benefits to them tax-wise. If you want to be more liquid, like you want to have more access to your money, I would say look into a regular brokerage account. I think the strategy, which is what I do, is I like to invest the minimum amount into my TSP to earn that match, right? The 5% match, and then max out my Roth IRA, which is like $7,000 every year. And then after I max out my Roth IRA, I go to my personal brokerage account and try to invest as much as I can into that account. So that's my 3 priorities, is to go in that specific specific order. All right, so let's talk about what you should invest in. Now, a lot of people overcomplicate this. They make it sound like investing is this crazy concept that it's like very difficult to get into, when it's a lot simpler than how it sounds, right? If you want to start investing, you don't have to pick individual stocks to get rich. You don't need to day trade. You don't need crypto to build wealth. Although crypto can be good to, diversify a portfolio. I dabble in crypto a little bit, but it's not my main, portion of my portfolio. It's like 2 to 3%. The number one effective way to become financially free, to become wealthy, is to go the boring route. I'm talking like the Warren Buffett, like index fund investing boring, bro. Like invest into some low cost index funds. I'm talking like total market index funds, VTI, VT, VXUS, which is international stocks, VOO, which tracks S&P 500. You can even do some like slightly riskier but higher growth potential ETFs, especially when you're young, such as QQQM, or VUG. Those are all great options. I'm a big believer in index funds because if you just look at the charts of all of them, they're almost guaranteed to grow. Like, yes, there is volatility. They do drop. They do go up and down, but that is the point, bro. Like, the market is never perfect. If you're thinking long term, it's almost guaranteed. No, not even almost. It's guaranteed to go up in value. So that's the one thing you need to understand. You got your age on your side. You have all this time on your side, which will help you grow your investments, because that's your main protection. Is if the market's down one day, or the market's down for a year, you don't have to worry about it, bro. Just keep holding, keep investing, because 5 years from now, it's going to be recovered. Instead of betting on just one company, you can literally own hundreds of them through index funds. Another mistake I see a lot of people make is they open automated investing accounts. So I'm talking like they hire investors, like advisors, or they buy into like robo-advising investing accounts, particularly like Roth IRA ones, where they'll invest for you, like the brokerage will invest for you. I know Fidelity offers this, but I really don't think those are worth it, bro. They're just charging you a fee to invest into index funds. Make that make sense, bro. Like, I can't wrap my head around that, because if you just do a little bit of research, bro, you can just open a regular free Roth IRA or brokerage account and just invest on your own into the same index funds that they invest for you. Like, come on, bro. They're taking a portion of your money just to do some simple like investing, bro. Like, it's not that crazy, man. Just pick like 2 or 3 index funds, like, I don't know, VOO, VTI, QQQM. If you want to know what I personally invest in, I like to do in my personal brokerage account, I do VOO, I do VXF, and I do VXUS, and then QQQM. Those are the 4 index funds that I primarily invest in to my personal brokerage account. And then for my Roth IRA, I like to do VTI, VXUS, and then QQQM. It's that simple, bro. Boring is what wins. None of the flashy courses or whatever that day traders try to sell you, man. Like, bro, it's all about working, making money, investing that money, and just grinding, bro. Like, it's not pretty. It's not pretty at all, but the boring way is always the effective way. All right, so before we end off the video, I want to talk about what you should not do when it comes to investing, okay? So I kept talking about why investing long-term is important, right? And how it benefits you, right? Because investing young, early on, is like one of the most powerful tools in life, right? I think Albert Einstein once said, like, compound interest is like the 8th wonder of the world, right? If you know how to use it, you'll earn money. If you don't know how to handle it, like, you'll lose money or something like that, right? Invest early on when you're young, and try to invest as much as you possibly can, because it's not about how much you can invest. It's about just investing in general, like actually getting started. Because if you invest later in life, you're kind of behind, like, already, bro. Like, it's already kind of too late. Like, if you start investing at 30 versus in your 20s, that's like the biggest time loss, like the time difference, bro. It's crazy, like how big of a difference it is when you start investing in your 20s versus in your 30s. It's just like the whole idea, bro, is like if you're in your 20s right now, or you're 18, you're 19, like you need to start investing right away. Take advantage of your Roth IRAs, your employer matched, 401ks and TSPs. Those are all OP as hell, right? You should also invest in just regular brokerage accounts too. Those are not bad. I like to do that too, because I like to be liquid with my money, and I want to be rich. I want to be wealthy before I'm in my retirement age, right? Before I'm about to die. But let's talk about what to not do with your money. You should not be investing when you need money, right? If there's a big expense coming up, like you're aware of it, then try not to invest, because it's better to take care of whatever expense you have now rather than later with a credit card or taking out of your emergency savings account. So if you get paid and there's something you need to deal with, don't invest that month, or just invest less than you can, right? Number 2 is you shouldn't panic sell. Don't ever panic sell your stocks. When others are fearful, when others are scared in the market, be greedy. Either just keep your stocks and don't buy, or buy more into it. Don't sell, bro. Selling is never an option. Like, do not ever settle on selling. If you see a stock, like a quality stock that you know has long-term potential, and you see it drop temporarily, then don't sell it, bro. I'm talking like Google, Microsoft, Apple. If you're investing in very good, high quality, like reliable stocks, and you see them drop temporarily, don't see that as a loss. Either see that as just temporary noise or see it as a discount. That's what a lot of people do, is like people like Warren Buffett, he would buy a lot of these stocks up when they drop so much, when they're cheap. I've seen crazy dips in my portfolio and I just look at it and I'm like, meh, it's just another day in the stock market, bro. Like, it's whatever. You shouldn't even be checking your portfolio every single day. So don't chase hype stocks. Don't try any like get rich quick schemes. Like, if people are trying to promote like a pump and dump coin, crypto or whatever, or they're trying to like sell you some dumbass stock, like, bro, don't fall for it. Just do your research, look into some effective, boring ways to make money, which is investing in low cost index funds, like I keep saying, right? I gave examples earlier of what you can invest in. The real money comes from slow money, right? The boring way, like I keep saying. So if you try to chase fast money, usually it'll just disappear, bro. All right, so I hope you guys enjoyed the video. I know it's pretty long and dragged. You know, I dragged this video on. I did this with I try to do this with no script, but yeah, the kind of the message of the video is to just tell you guys that nobody is going to come and save you financially. You know, your job is not going to save you. The government's not going to save you. Your family's not going to save you, right? So investing is probably the best way to secure financial freedom. It's literally the most common, normal way that people like build wealth over time. Literally, you don't need to be rich to start investing, bro, but you need to start investing to become rich. That's the whole idea. It doesn't matter what amount you put in. What matters is that you actually start investing, especially from a young age, like I keep saying. Go open that account, put $50, $100, even $5, $10, and just invest as much as you possibly can, because it doesn't have to be a crazy amount. It just has to be any amount, as long as you're just putting money consistently into the market and investing in like good quality stocks or index funds. You're going to build the habit over time, and it's going to grow, and you're going to see the money come. You just got to think about the future and think about, okay, where's this money going to head 10, 20 years from now, and even 5 years from now, and don't think short term. Don't think what's going to happen a week or a month from now, bro, because again, it's all temporary noise. People like to go all crazy on the news and talk about, oh, the market's crashing and it's over for everybody, but it's not the case at all. They've been doing that for years now. People always keep falling for it, but you can be the difference, man. We can be the difference. We can be the change where we finally realize we got to put our foot down and be like, no, I'm not going to fall for the traps anymore. I'm going to keep investing and become financially free, bro. Hope you guys enjoyed the video. Go check out the credit card guide that I recently made. It's super high effort. You know, I put a lot of time and effort into it, and it was like a week and a half in making. Another thing is, if you guys want a good platform to invest on, I have a few links in the description of this video. If you use the links to sign up for these specific platforms, like I think Robinhood and SoFi, which are great platforms, by the way, I use them. You can get a bonus. They'll give you like $5 to $25, even up to $200 worth of free stocks, and you'll also be supporting my channel, right? Supporting my work. So of course it's all optional, but I would deeply appreciate that, guys. But enough begging for money. Hope you guys enjoyed the video, and I'll see you guys in the next one. Peace out.